So our focus today is talking to you as an e-commerce seller with customers in the EU. For the purposes of today, we are focusing on the arrangements that are in place for shipments that are no more than 150 euros in value or 135 pounds. And we're going to look at what's changed in recent months and what your options are. Now, clearly, you may definitely be shipping through your website with the value of goods far in excess of 150 euros. So this is not to suggest that you don't have shipments that are outside of those parameters, but just to share with you that today our focus is on the smaller value shipments below 150 euros. Obviously, we can help you on larger value shipments as well, but that's not our content today. The other thing that we are going to do is talk quite generally about your requirements. We obviously in a webinar format have a limited amount of time. There may well be other things related to your shipments to the EU that may be specific to your products, such as product controls, labeling requirements, topics like CE marking, CA marking, and so on. So again, they're specific to your business, your product, so not today's focus, but also areas that you may have in mind and that we can help on. But our focus is what's changed in terms of your general requirements as an e-commerce seller with your EU customers, and specifically the VAT element of that. So where are we and how did we get here? So little bit of a history lesson, but as we know only too well, we fully departed from the EU at the end of last year with the end of the transition period. The actual legal departure from the EU was some 11 months before that, but the transition period gave us that space in order to prepare for what was coming next, and it felt very much the same as it had done previously. So as of the 1st of January this year, all of the sales that you make to customers are now exports from the United Kingdom, and therefore correspondingly they are an import into your customer's destination country. And so they have moved from being an internal shipment, a bit like sending to Scotland or Wales or something, and they have now become an import and an export, which attracts not only processes, as you're aware, but also potentially duties and VAT. So if you are selling to customers in the EU, you've got to think about those elements now, and you have done for the whole of this year, but you wouldn't have had to do that previously. So it's definitely a change. Looking at the specifics, then if you do think back to last year, then there was a 22 euro threshold, and any goods that you sent below that 22 euro threshold didn't attract any particular requirements. That was removed, and now the thresholds where we start to look at things like duties and so on is now 150 euros. Shipments under 150 euros do not attract any import duty when the goods arrive in the EU country. So that's good news. If we're talking about small value e-commerce shipments, we don't have to worry about duties. So that's great. We love taking things off our list of things to think about. But unfortunately, they now attract local import VAT. So when the goods arrive in the EU destination, they attract VAT. Now, this doesn't matter what your VAT registration status is, because we're not talking about sales VAT that you may or may not charge to your customers here in the UK. We are talking about local VAT in the destination country. So the shipment is attracting that VAT. It's got nothing to do with whether you are VAT registered or not VAT registered. The goods will attract, the shipment will attract VAT. The other issue to be aware of is it is local VAT, and local VAT rates differ from one country to another. So VAT in France is different from VAT in Lithuania, different from VAT in Hungary. So you need to think about the fact that the shipment is giving rise to a VAT liability locally, and it is at a local percentage. Now, in order to address this, the EU have introduced something called the EU Import One-Stop Shop. And this is designed to make life easier, and it does. So although this is a new thing for you to think about, this is not the EU putting difficult bureaucracy in front of us. On the contrary, the Import One-Stop Shop is a mechanism that allows you to manage this issue for all 27 member states. So although there is detail because the VAT rates change, you don't have to manage this process in 27 different countries if you're shipping to all of them in the EU. So that's a good thing. And then the other thing to bear in mind is we have something similar for goods coming into the UK. The United States has something similar, goods going into their market. So this is something we need to consider as a result of Brexit, but it is not the EU creating something that is not in place in other parts of the world. And the reason that all of these governments have something like this in place is because goods that come into the country should attract VAT. Imagine if you were buying goods into the United Kingdom and you were buying them from an overseas supplier. Well, you should pay VAT in exactly the same way you should pay VAT to a local supplier. And if you turn that round and say, well, if your customers pay you VAT, but they don't pay your competitors overseas VAT, well, that's not a level playing field, and that's not fair to trading. So although these changes feel difficult, it's another piece of admin for you to worry about, they're there for reasonable reasons. And of course, nobody likes paying any tax, but we all want our countries to run, so we have to pay it. So it's not just a difficult thing it's not just somebody creating something that's inconvenient. It is for very good reason, and we have similar arrangements in the UK. So to paraphrase, it's not the EU being grumpy with the UK. It's perfectly reasonable to have this in place, and actually they've done a good job of trying to help us. So let's have a quick look at VAT and international trade, because it's important we understand what we're actually talking about here. So forgive me, you all know many of this already, but it's important we're all on the same page and understand what we're talking about here. Let's imagine that you are selling to a customer in the UK, so a domestic sale. The way that VAT works, as I'm sure you know, is that if you're VAT registered, you charge VAT. If you're not VAT registered, you don't charge VAT. And then if your customer is VAT registered, then they can recover the VAT. And if they're not VAT registered, then they can't recover it. So in a typical business-to-business transaction where both parties are VAT registered, nobody really cares about VAT because it's not a cost, you're going to recover it. Whereas in a business-to-consumer situation, well, the consumer is paying more if they're buying from a VAT registered business, and consumers are generally not VAT registered, so they can't recover it. This is why we want the tradesmen working on our houses to not be VAT registered ideally, because as private individuals, we can't recover the VAT, so we don't want to pay an extra 20% for our patio or whatever may be done for them. So that's how VAT works domestically. And notice that the VAT element is on the sale side of that transaction. Now let's compare and contrast how VAT works in an international sale. So this time the seller is exporting the goods because the buyer is overseas. In this case, you don't charge any VAT because exports are zero rated for VAT. Now you may be thinking, well, hang on a second, I've never charged VAT on EU trade. Well, when we were in the EU, that was again correct, but for different reasons. The reason we don't charge VAT now to our customers in the EU is because we're performing an export. However, when the goods arrive in the EU or any other export destination, that is the point at which they attract local import VAT. Without wishing to dive off into another international trade topic of Incoterms, it is important to note that the Incoterm rule does determine who's responsible for the import VAT. If it is DDP or delivered duty paid, then the seller is responsible. Any other Incoterm, then the buyer is responsible. And again, if the buyer is VAT registered there, they can recover the VAT. If they're not registered, then they can't. So again, looking at where all of these procedures take place, when you export goods, you have to carry out an export declaration, and that may be a very, very simple process if it's a small value item going via the post office. Very occasionally export duties apply, but very, very rarely. And then when the goods arrive in the destination country, there is a corresponding import declaration. Again, very, very straightforward and easy in a low value postal type shipment. If the goods did attract duty, and remember, if they're below 150 euros, they don't attract any duty. But in a normal export import scenario, they may attract duty. But regardless of the value, import VAT becomes payable at the destination. And so what you're noticing there with that chart is that domestically VAT is taken care of on the sales side of things. If you're VAT registered, you're charging it and then accounting for it with HMRC. On your exports, you have no VAT to think about on the sales side of the transaction, but when the goods arrive at the border, VAT becomes payable. I will add a bit of a caveat there. VAT is a complex subject. We're not VAT advisors, but certainly we can share the expertise that we have in this context, but there are occasions where we have to refer folks to their specialist international VAT advisors. And also there are exceptions and thresholds that add to that complexity. And specifically that we'll talk about today, there is an exception to where you have to charge VAT, and secondly, online marketplaces have separate processes. Both of those we're going to have a look at. But that's the basic principle, and important to get clear in your mind that what we're talking about here is not HMRC VAT of 20%. We are talking about import VAT that becomes payable when the goods arrive in their destination country. So that may or may not be at 20%. It will be determined by the destination country, and that is the point at which it becomes payable and is applied to your sale. So we now realize that we have 27 countries we might export to, all with their own VAT rates, and there may be an obligation to pay VAT. So we need a solution to this. So as I say, VAT is not generally charged on exports, but import VAT applies. The EU introduced the Import One-Stop Shop, which came into life on the 1st of July this year, to help with the collection of import VAT. And therefore, you as the exporter may have to charge VAT, and I will explain the different scenarios in which you do and you don't. And as I say, different rules apply to online marketplaces. And the reason that this exists is because there is a VAT liability there. And as we all know, and you may well have experienced, it is not a successful solution when the goods are sitting at the border and they're waiting to have the VAT paid, and your transporter is, at the best case, phoning your customer and asking them for additional payment. And at worst case, when they can't get through or the customer refuses the additional payment, they're sending the goods back, or worse still, the goods are just stuck there forever. We've certainly seen some of that in the last few months. So it simply is not practical for the recipient of the goods in many cases to pay additional fees. They're not ready to do that. They're not happy about that. It's a horrible customer experience for your customers. So in recognition of this, and in common, as I said earlier on, with many other markets around the world, the EU Import One-Stop Shop was born, and that gave e-commerce sellers a way to solve this issue of import VAT having to be paid, goods getting stuck, and all the associated delays that go with that. So you now have options. Let me walk you through what your two options are. So the scenario I'm talking about here is that you are you're an e-commerce seller. You're selling off your website and you have customers in the EU. Again, I'll draw your attention to the fact, remember the VAT liability is hitting on the recipient side, not on your side. You're still selling goods that are for export. So here is your first option, which doesn't involve using the import one-stop shop. We're back to Incoterms, which we can describe separately for you, but there is an Incoterm DAP delivered at place. If you can agree that with your customer, then that puts the onus on your customer to take care of the import processes and fees. So what that looks like is you don't charge any VAT, it's a zero rated supply, but when the goods arrive at the border, your buyer has to pay import VAT locally at their local rate. For the majority of e-commerce sellers, based on all of the companies I've worked with in the last 11 months and more, this is not a satisfactory solution because they don't want their customer getting a phone call from a transporter saying, you owe VAT, please can I have a credit card? But I'm sharing it with you as an option because I have seen one or two scenarios where this does work. I have one client who has very specialist goods and they can only be purchased from that particular company. She is she's not prepared to handle the VAT and the associated issues that go with that, but her customers are still keen to get her products. And so she advises them, yes, we'd be delighted to supply you in the EU, but we don't cover the import processes. And so please be prepared for a phone call or an email from our transporter asking you for additional payment of the taxes that are due. And her customers are happy with that. It does rely on very close communications and they need to be told up ahead of time, but it works. I have another customer, this is a bigger company, and they're selling to a mixture of consumers and businesses, and it's all automated on their website, and they do sell DAP, so the buyer is taking care of the taxes, and they have a box on their shop, a tick box, and when the customer places the order, they get a message about the fact they're in the EU, therefore there could be some additional charges and they need to be prepared for that. And they have to tick the box to acknowledge they've understood that so that when the phone call comes through, they're not complaining and saying there's a problem. So I share this option with you because I have seen scenarios where it works. But I do acknowledge that for most of the e-commerce sellers that I've worked with, that solution doesn't work. They don't want their customers getting a phone call. Their customers have no expectation of paying additional fees. So it's just generally a horrible customer experience. And so therefore that takes you down the road of looking at the EU import one-stop shop. What happens on your side is that you register for the IOSS, you then charge and collect the VAT. And remember, you're going to have to collect it at the buyer's local VAT rate. I've got a chart that's going to show you what that means in a moment. And then you have to remit that to EU customs via a monthly VAT return. But on the customer side, there's nothing for your customer to pay. When you're registered with the IOS, you'll get a registration number, you put that on your shipments, and then they, theoretically at least, should sail through the border controls without any interruption. They get straight to your customer, and there's nothing for your customer to do or to pay because you've taken care of that. So what do you need to be aware of if you're going to go down that route and use the EU IOS? Well, let's just recap again. This applies to goods coming outside of the EU. Well, we're all in the United Kingdom here, so that definitely applies to us. But I mention that because if you had warehousing in the EU, or a subsidiary company or something like that, where the goods were physically in the EU already, then you wouldn't need to worry about this because you're not shipping from outside of the EU. As we've mentioned a couple of times, the consignment value is less than 150 euros, 135 pounds roughly. They are not subject to any excise duties. So if your goods are alcohol, tobacco, those kind of excise goods, then you can't use the iOS. And this came into effect on the 1st of July. You know, we're in November now, so we're talking about things to put in place now and going forward. Registration opened on the 1st of April. So obviously this was in the planning for some time, and you register on a portal in a member state. The final bullet point there is what, in my experience, is the catch for UK companies, and that's why it's in bold. Everything up to that point, you're probably very happy with, but it is worth noting you will need an EU intermediary unless you have some kind of physical presence in the EU. And certain, well, I was going to say for smaller traders, but actually I can think of some quite big traders with no presence in the EU. That has been the stumbling block, and that has made it very difficult for businesses to look at how they might address this in the most effective way. What's the answer to that? Well, it really depends on your circumstances, but I will give you some examples. There are a number of companies that are providing EU-based fiscal representation for UK businesses. And so you can buy the services that those companies provide, and that gives you the fiscal representation that you need in the EU in order to register for the iOS. So that's definitely a solution. Royal Mail have two solutions that they've put in place, one in partnership with Deloitte and the second one in partnership with Taxamo. The second one looks particularly cost effective because it integrates with your online store, and the charge per transaction is tiny. It's £2 per transaction, which is very, very appealing. But unfortunately, it doesn't integrate with too many online stores at the moment. So I think that's definitely one to watch as their integrations increase. So there's multiple options you can look at there. But of course, there's a cost associated with them. If you want to use the Royal Mail partnership with Deloitte, or buy services from others that provide what you need to meet the requirements here, there is always a cost associated with that. So again, impossible to go into the specifics for your business, but what I'm seeing companies doing is sitting down and doing a cost benefit analysis. If the EU is an important market for you, if you had great trade with the EU pre-Brexit, then an analysis of what the costs will be for you should be quite easy to look at, and then you can weigh that up against the cost of these service providers. If you see it as a great opportunity, then it may be worth the investment. But that is very, very company specific, because there is a cost and you've got to work out whether the profitability on your sales to the EU make that worthwhile or not. And quite simply, I can't predict whether that will be the case or not. I've worked with companies where it is and companies where it isn't. That's for you to look at your sales patterns and, of course, your growth plans, because the EU is still an extremely attractive market in terms of its proximity to the UK. So that is how you would consider this from your side as an e-commerce seller. Let's just spend a moment or two looking at how we would handle this if you were selling through what the UK calls an online marketplace, what the EU call an electronic interface. Now, there is a formal definition of those that I would refer you to if you were looking at this, but they are the organizations that do the whole job for you. So they are bringing customers to your products, they are handling payment. In the case of Amazon, they may also be handling fulfillment. So this is not somebody who links to your website, then that's your e-commerce sale. But if you are listing your products on Amazon, eBay, and the numerous other online marketplaces that exist, then they would fall into this online marketplace situation. And things are different. So the EU and other governments recognized, well, trying to tackle the many, probably tens, hundreds of thousands of Amazon sellers that are selling into the EU well, they can get to what they need to do much more quickly by having the online marketplace take care of it. So in the case of Amazon, eBay, Etsy, those types of organizations, then they are required to register for the iOS. They will then give a registration number to their sellers. And when you ship goods that are a result of an eBay or an Amazon or Etsy or whatever the marketplace sale is concerned, you quote their iOS number and the goods sail through the borders. You don't have to register. You don't have to do anything. But do remember that because that registration has taken place at the Amazon level, Amazon are on the hook for the import VAT. So as they distribute the proceeds of your sales through their disbursements, you will notice that they will withhold local VAT in addition to all of the other fees that they withhold for commission, references, storage, anything else that's in those fees. So you are still paying the local VAT. It's just you're not responsible for the collection, the payment, the administration, or anything like that. The online marketplace is required to do that, and so they withhold it from the proceeds that they send out to you. So in some respects, that makes it easier. You can certainly fulfill all your EU import VAT obligations if you're selling through an online marketplace by letting them do it for you. And so that works satisfactorily now. There were a few hiccups at the very beginning in July and August, but the feedback I'm getting from clients now is this is just working. So if you're a bit confused about how the numbers work and how everything is going to play out in reality, let me share various different examples with you. So the first two examples on the screen are related to sales you might make from your website. The middle two are sales going through an online marketplace like Amazon, and then the example at the bottom is how you would price match. And I have chosen two EU destinations at either end of the VAT scale. So our rate of VAT is 20%. In Luxembourg, the rate of VAT is only 17%, whereas in Hungary, it's 27%. So good ways to illustrate the different numbers. So let's imagine that you've got a product on your website for £100. The VAT that product attracts is shown £17 in Luxembourg, 27 in Hungary. And so the total amount that you should be collecting from your customer in order to meet your obligations is 117 or 127 respectively. And if that's on your website, then you will have been required to register for the IOSS, remembering you need local fiscal representation to do that. And when your monthly VAT return is submitted, you will remit that VAT element of those two sales. If we compare what that looks like to selling through an online marketplace, the numbers are the same, but this time, instead of you having to do any registration or VAT return or any payment, all that happens is that the marketplace withholds that money. So they keep the 17 and the 27, and they remit it as part of their monthly VAT return. So you never see the money. But of course, the money, you still see the impact of the money because you receive less. And then finally, people say to me, well, hang on a second, I need my product to be £100 no matter where I'm selling it. What happens to that if I'm trying to match a price? Well, if you're selling this item for £100 to every country in the EU, then in Luxembourg, you're going to keep £85.47 of that, but £14.53 is going to be considered VAT. And it's either going to be on your EU VAT return or your online marketplace is going to withhold it. In Hungary, where the rate of VAT is much higher, then you are only going to receive £78 from that sale because 21 has to be paid to the local EU customs authorities. So you can price match, but you need to be prepared for the fact that you receive less revenue in markets where the VAT rate is higher. And the other question I commonly get is, oh my goodness, how on earth is my shop going to work out what the VAT is? Well, actually, online stores understand all of this. So your online store should have the capability of accepting an order from a customer, recognizing from the country that they're in Luxembourg and applying 17% or 27% if the customer's address is in Hungary. So I'm not taking away the fact there's complexity. There definitely is complexity to this. But of course, the world of e-commerce is all about automation, and online stores definitely understand these requirements. They certainly do by now. I do acknowledge they might not have done at the beginning of the year when things were still becoming clearer, but they do now. So a reasonable off-the-shelf e-commerce store should be able to take care of this complexity for you and detect the country of destination and apply the appropriate rate of VAT. So it is all possible, and systems are being developed in order to help you meet your obligations. So hopefully I haven't blinded you too much with science, but you may well be thinking, okay, then what do I need to do now? So I always like to end with a checklist and some practical tips on what you actually need to do with the information you've just gained. First of all, understand and acknowledge your VAT obligations for your online sales. You need to divide when you think about the topic of EU VAT obligations, remember that everything going through an online store such as Amazon is going to be treated differently from anything you're selling directly from your website. You need two different approaches and realize that your sales are two different types of sales. You need to think about who's going to pay the VAT. Remember, I gave you that option at the very beginning of shipping DAP, and this is where your customer, perhaps by ticking a box on your website to acknowledge that they have understood, are going to be taking care of that. That is still possible. And as I say, specific specialist products, that can work quite well. If at the end of that assessment you decide, actually my customers are not going to take a phone call asking for a credit card, I am going to have to take care of this directly on my website, well, then that will lead you down the route of the iOS, and you'll have to look at what your options are for that. Where do you go for further advice? Well, anything on international trade, I will always direct a business to their chamber in the first instance. You've got a great international trade team here at your chamber, so that would always be your starting point. But then, of course, there are specialist companies such as ourselves, and if you want to look at that return on investment analysis, understand how you might achieve iOS registration, or indeed need support on any aspect of your international trade, of course, we're here to help you. So that's concluded the content we wanted to present to you. And I think I'm happy to say there aren't any questions. So I either, looking at the chat window, blinded you with science, or it was all nice and clear. But please, we have some time available. I'm going to hand the hosting back to the chamber, but very, very happy to help with and take questions.
Thank you, Frances, for the presentation. And before we go on to the Q&A, if you still have any questions, please feel free to add them on the Q&A box or on the chat, and we will try to answer them. If you just go on to the next slide, we are going to have a second poll in the meantime, just to give you a bit of time. And what we would like to know right now is what have you considered so far in terms of customs with the EU? Are you completing your own customs declarations? Are you using an agent? Are you looking to appoint a new agent? Are you still undecided, or is this not applicable to you at the moment? So just give it a minute for everyone to answer, and then we will share the results. All right, so we see that 50% are using a customs agent. There's still a 10% who are undecided. and this is not applicable to 40%. Thank you for answering that. And it looks like there aren't any questions so far. So we have a feedback poll, which I'm going to launch now. If you would like to give us some feedback on the event and what you thought, that will help us to improve also our future events. So we have a request, and it's to give an example of what might happen if a company doesn't take your advice today.
Your goods will get stuck, in short. So what happens when the goods reach the border is that border control are looking for one of two things in this e-commerce scenario. They're looking for an IOSS number. So if you have one from Amazon or Etsy or eBay, then you quote it on your packaging. If you have your own, you quote it on the packaging, and then your goods will sail through. Alternatively, they would then look at the Incoterm for the shipment, and if it's DAP, then they will look to the recipient to pay the VAT, and that generally involves the transporter sending an email or making a phone call and asking your recipient for a credit card so that they can make the payment. So a little note in there about making sure your customer's telephone number and email address is super clear, so that if you are in that scenario, then everything can be done smoothly. If none of those scenarios are completed successfully, then well, at best your goods will come back to you. At worst, they'll be stuck in some holding area of your transporter because they are unable to clear customs and make it to the destination. And then you have goods that you have essentially lost. You have extremely grumpy customers, and they'll almost certainly be up on social media and other review platforms to say my goods didn't arrive and so on and so forth. And of course, that's a cost and a degree of administration that companies just simply don't want to go through. So we saw a lot of interrupted shipments at the beginning of the year, and some were things that were completely outside of your control. But we're out of that now. We're now into a world where we do know what the post-Brexit scenario is. We do know what we should be doing. And goods with IOSS registration numbers are getting through. Goods shipped on DAP are getting through if the recipient is ready. Other goods are not. They're getting lost, stuck, returned. And so that's really the consequences of not getting the things in place that you need to successfully sell to your customers in the EU.
Wonderful, thank you. I don't think we have got any more questions. If you can just please go on to the last slide. The next one, please. Yeah, so just the next slide, please. One more, I think. There we go. So thank you again for the presentation today. I hope this was helpful for everyone who attended. If you have any questions, you can contact us on the details that you can find on this slide. And if you want to speak to Frances as well, you can let us know and we will make the introductions for you. We will be sharing the slides in the next couple of days, as well as the recording. And we are open to any questions, any follow-ups. Feel free to get in touch with us. And thank you for attending. Hope you have a nice day.